Uh, Ready, go. Good morning, good afternoon, good day, good day, good day, good day. Good egg. Nazi, good egg. I was just having the best sushi in the whole world. Actually, it's funny because I predicted that in the webinars a while back that we'd have communication problems, and of course it slammed over the last 3 weeks for my computers. I burnt 2 computers, bought another one, had it so I can predict nicely with those sort of things with aplomb, but it doesn't mean you avoid it. I think I can hear him. I think I can hear him in the background there. Not only that, JR, it's a holiday in Victoria tomorrow, as well as Sydney on Monday, so it makes for a bit of a bizarre life, doesn't it? Thanks, John. Now, go ahead, Terry. Doesn't it want to have it? Goodness. The markets are open both days. As it's been a fantastic week, hasn't it? Been great, wonderful, almost like clockwork. Yeah, yeah. Well, we've been getting people short the market and then and then buying it out early on Wednesday, and so that's been one of the nicest nice moves to do for people. It's just I like doing that sort of stuff. We were negative on the on Friday, negative into Monday, Tuesday, and then started to increase our exposures to the market on Wednesday morning first thing, buying some stocks. We increased our PHG trades by a fair bit at that time. So that was a very nice week, and we've got people long buying long. The speculators we got long, we got the investors long in their self-managed super funds, increasing the self-managed super funds, and yeah, it was been a nice week. Okay, well, last Friday, what we saw was that the US market was simply not enjoying itself, and that's we'd been watching the Dow. We'd been the week on the Friday before. I'd gotten my platinum members. I'd called them up and given them the short trade. One gentleman had lost $15 million previously in the market, so I really wanted to give him a gold trade, gilt edge trade. So I rang him up and I said, "You better short this market." It was around about this point here, and actually a little bit, maybe a little bit higher, and got him short. Got to take some profit on basically Monday, Tuesday, and then on Friday, the following Friday, we had another short trade which spiked up again. It came down into the Tuesday nicely and has rallied. Came down into just to where it should have, and it broke a little bit lower than where it should have, and so created a profit-taking zone at that point. And it was just a nice, just a very nice time. That's correct. Yep. Okay, we'd already been short and holding short since the previous Friday, so it was, yeah. So, and we also looking for reasons to short again on last Friday, and it gave us those reasons. So, we had a couple of trades, and we got away with that then. Monday, I just said hold it short, and then on Tuesday, we took some profit, and we could see that it was showing signs from Tuesday night's trading in the US that the market, particularly on the S&P, was throwing a reversal signal. So we should let's buy it, or if you wanted to wait for a buy on the break up, you'd look to buy. I'll just show you that on the PHG trades list. So this is the PHG trades for the 30th of September, which was yesterday, and you can see that this was published on at 10. This was actually completed by Michelle at 10:40. I start the webinars at 8:30 and 8:40 in the morning. This is the ASX transcript, and you can see here that we're saying, well, the stock market, this is the Australian market, and we'll see the US markets. Well, the stock market is now into good value areas. The US stock markets have this is the transcript of what I say. So what people, the US stock markets have retested old lows, done good retracements, and thrown some reversal patterns of sorts. Well, that's where the market is confused, and it's not sure. It thought it should go down, and it didn't, so it's confused. The five-wave structures complete the patterns of the downside in Elliott wave. If you've done any of my Elliott wave tutorials and seminars, you'd know that the five-wave structure completes the impulsive move to the downside, and then you can get a reversal and look. You can buy back your shorts and look to go long and sell into rallies later on. Yep. That was on Wednesday, and basically the Profit Hunter Group Gold members get to see that live. This is the World Indices transcript, which, as you can see, this is a tip for PHG members. You can see where the date is. If you want to know what time it is, you can click on here and see that was published at 8:53, and you can see I've said this is a recording of the webinar. So if you want to watch the recording, you can watch that, or you can read the transcript. Some people who are traveling in places like Nepal can actually find it really, or have low bandwidth internet, find it really good to go through and search through for things. Like, for example, you might want to see what the Italian MIB would look like. So you go Italian MIB, and you can come down to here. If it breaks, we can expect a rally. If it breaks 21,000, we can expect a rally to 21,700. So we cover a lot of different markets, like volatility index, the NASDAQ, the E-mini S&P. So on the E-mini, we can see a doji of indecision, and sometimes what I do is I get the ASX transcript edited, and that's edited probably a few hours later by an editor. On the E-mini, we can see that it's a doji of indecision, and by a break above 1890 with stop below 1868 or 1860. So you could buy down to, that was actually a buy down to 1875, or buy a break. You pick that up in the recording. Yeah. Okay, well, what I do there is, if I can just move through here, you can see, I'll just move through some of the transcripts things. You can see here that we got the PHG trades coming up. PHG trades are ones that are listed that I've given buy recommendations, and you can see here we've been looking to buy BBG, BBT. Looking for Crown. Looking to buy Crown. We've been looking for $9.54, but we went in to buy a little bit yesterday at $9.93. IPL, we've been long. IPL looking for $3.97, which has been reasonably achieved, or $6.12. There are some other targets, but we have all of these PHG trades on. We have ones where we have been stopped out. We've been seeking to buy bottoms, which is the riskiest trades that we take. We do certain other trades, but we were getting back on the bike because we wanted LLC, as we did with REC. S21, S32, we've been waiting for dips to $1.22. I noticed that it got knocked off today. So we haven't had many PHG trades on, and we've been doing that. So as you move through this, you get to see some of the markets. But here's another tip for PHG members. If you go down to here, you can see the transcripts and videos. So you wanted to talk about today and what I was saying today. Here is a question from one of the Profit Hunter Group Gold members, and she's asking about XJO and XAO long, short term. And what I'm saying here is all ordinaries, if it can clear here and now 51.40, then expect 51.78. Now I gave targets to around about 51.40 in the XAO and about 51.30 in the XJO. And I say, methinks it's not that strong to get there shortly, but if buying uses stop loss at 50, that was 50.75, that's a typo. XJO is also headbutting resistance now, and this was published at 144 today. So if it clears that 5100, expect 51.57, have a stop at 50.59. And what you can see here is that it really didn't like getting through that level just yet. It got closed at 51.12, but it's really not yet got through those points. So at the moment, it's a little bit touch and go. It's basically achieved the sort of first leg in the rally that I expected. I did first target like a bigger target around the 5200 in the XJO. So you can see from that how we do a moving thing. We have a webinar in the morning. We go through all of the markets. We go through the world indices and the ASX, and then I set the targets where markets can go to. What we can do here is we can see what I said this morning. Now, for a couple of technical reasons, I did an ASX transcript, which was probably, where is that? Roughy transcript. Because the mics were doing funny. I had to move from Melbourne to Sydney today. So here we were looking at, again today, notice the difference. I'd probably like to add on dips, but overall the trend is still down, even though there's a bit of a divergence. Above 5200, and then we start to think about this in much better tones. So much better, we give it much better thought. Okay. Not in probably not in the depth or the detail that I do. There's certainly people giving advice out there, but when people join, and generally I get people who have been trading for a number of years become my members. It tends not to be beginners. They tend to do my Australian shares report, as getting used to what I do. And what happens with that is that people come in and they go, "Wow, I've been trading for 25 years or whatever, I didn't know you did all of this, and I can ask questions of it too, and you respond within an hour or two at worst. So it's pretty cool. I like that. Well, I still got the feeling that this is still in a bit of a range, and that we still have a potential for another move to the downside. I'm not totally bullish until it gets through 5,200. I like to be long, and we've certainly got the move up. And from watching all the talking heads on television, they're they're all happy again, and I'm getting emails from um, people I'd rather not mention that I consider to be dangerous in the markets, saying how it's okay to be buying, but they're saying to buy today. They weren't saying yesterday or on Tuesday. They were saying to buy today, and so something says to me that the people who are manipulating this market have the opportunity to stuff you up again. And so be very careful, because there is a grand manipulation going on right now. There's a couple of stocks which I believe are safe, but there's a grand manipulation going on, and they have absolutely done the manipulation to the textbook. And it's beautiful to watch. And I noticed that people getting emotional and angry. I was watching one gentleman talking about people getting angry because he mentioned that he thought they should be buying the market. And I think it's got something for everybody in it. These markets, the volatility has been awesome. It's been really, really, and I've got one PHG Platinum member who texts me asking how to trade the SPY, and it's been just really poetic to see where you can bang off levels and put them away, and yeah, it's wonderful. Really nice market. This is Credit Corp, and it would be best described as cleaning the toilet with itself lately. It's put itself short on the monthly charts, and so really the next area I would think that it could go to is somewhere between $8.22 and $8.47. So I wouldn't be super excited about getting in there. And if you ever watched any of the Elliott Wave tuition that I've done, you'll know that this is a five-wave structure that is complete, and it should come back down to the fourth wave of lesser degree. So I've just given you a lesson in Elliott Wave. And it's fallen out of bed. There's no way that I would touch that at the moment until it got down into those lower targets. On the daily charts, I probably want to short more close on it, rally back up to $10 or $10.16. The problem with where it is now, its stop loss needs to be a long way away. So if you are shorting it, you'd only take a small position, and you need your stop loss above $10.65. I'm about risk control, not being a big swing and dick. Full stop, new line. Stay away. Wait for those lower levels. ACG. Jamie Packer must be in town. There's fireworks going off in the harbour. Yeah. I didn't know who was doing the fireworks till I got this unit in this building in Bellevue Hill, and they say, yep, we look at it all the time, because you can see full on Rose Bay there. These boat rocks up and they have parties and fireworks go up. You can hear it in the background. At core, this at the moment, it's not bad. It's not bad. It's having a good sideways correction. At the moment, it's got probably the lid on it around about the 27, 28 cents. But if it can break that, I'm happy for looking for 42 cents on the top side. Your stop loss, if long, is around about 18 cents. This is on the bigger investors scale, which is probably most appropriate for people who are listening in. So at the moment, I'd be thinking about owning some probably as deep as 20 cents with that stop loss that I just gave you. If it does break down below that 18 cents, then I'd be looking to pick up around about the 14 cents with a stop loss below 13 cents. And that would be, and the sneaky way of entering into the market, if before it blows its top, would be a break above 27.5 cents. So it needs to get above 28 cents really to get free and clear of a lot of junk. I think in the long run it's got some potential, but just might be able to get a bit better level. Yeah, that'd be the best for investors if you can pick it up down there. Okay, CGF is already a buy with a stop loss below $6.92. I buy more on a break above $7.40 with a stop loss below $7.13. In terms of timing, I really feel it's now, and it's held fairly well. Okay, so what I suggest, the timing that I just gave you is pattern wise, it's looking good above $7.40, $7.50. Usually at this time of the year, it goes into a bit of a funk. And I suspect that it's stronger than the normal year, but that's just pattern. So if it doesn't rally from here and doesn't clear through 750 and head towards, say, $8.50, you'd be looking to buy it in early December for a rally into late December, and then you could have another bit of a tribe. So he's asked about timing. I gave straight pattern. Sometimes there is a conflict between the cycles that I can see and the patterns that I see in the chart. So when that happens is we really got to come down to some thinking and some trading tactics to put on how we get into that particular trade or investment. At this point, I'd be more keen to buy a break above $7.50 or wait for a return down to around about the $6 area with a stop loss below 550. Yeah. Para, I guess it would be. No, it's not. Yeah, it's Japara Healthcare. Okay, Japara Healthcare has been a very nice little creature. And that very nice little creature has been moving along well, but it's now struggling. So again, it's something I wouldn't mind seeing it get down to about $2.40. That would be a nice area to pick it up. If you are long now, you can have your stop loss below $2.69. That would be preferable, just by the way things work here. I think that's okay. And it's walking okay, but I guess it's the healthcare sector hasn't been so good. So I really like to see it click above $2.87, for example. That would be nice momentum trade, or a dip buy down to $2.40 with a stop loss below $2.30. Nope. lukewarm. Okay, this is one. This has been a favourite of one of my Profit Hunter Group Platinum members, and he keeps calling me up, going, "David, what do you think of this?" And I go, "Well, it's good because it's got a good yield, and it also has some pretty interesting characteristics on it. In that, it's come down to be incredibly cheap. It's got a fantastic yield, and nobody believes what it does and how it does it, and that's often a good thing. The problem is the chart's really stuck in the mud. So I'm very keen. He was picking it up down in this region here with my help. I'm very keen to have a stop loss sense, because I think below there you're thinking really that this stock has broken down. And at the moment, the best you could expect is towards 80 cents again. Back over here when he first wanted to go in, which he did, I gave us. I said, well, I thought maybe it could go a little bit higher towards possibly about 80 cents and 90 cents. It didn't quite make it, so I think what it's doing is a little bit disingenuous, and the market doesn't quite believe what it's been doing with its dividends, and so if it can keep doing it, the market will be fooled. That is really on a break above 80 cents, and then you're looking towards $1. So at the moment, I think it's got some potential, but your break above 80 cents is critical to get above before you become an extremely big bull. On the shorter time frame, you can see it has popped its head above the negative cloud, and so maybe you're better off buying a retest at 66 cents, stop loss below 62 cents in the short term, hoping for the 80 cents area. So it's not a screaming buy right now, but it has got some potential should it break above 80 cents. If they're looking for yield, this is a good one though. So if it's not a trade, it's more of an investment. So if you want to put that into the investors category, that would be okay. Just to stop below 58 cents. Well, that's a beautiful thing to happen there, Marvin. Just sitting on your hands is one thing that really helps you in the markets. What you can see here on the chart is strong volume to the downside with excessive ranges. So really the area between $3.50 and $3.75 is an area where we should see some good support coming in. See, here's the $3.50 area. That was just my eyeballs doing that calculation. So we can see that it's starting to hesitate now on the way down, and you probably find it's forming a triangle. We're seeing a little bit of a bounce up, probably comes back up to $4.58, churns around, and then has one more go down to $3.50. So it is getting close to completion, Marvin, and I would think that you want to be looking to short-term buy it if you want to. Stop loss below $4. Looking for $4.50. You buy it on dips down to probably around about here now at $4.19 with a stop below $4. That's and be prepared to sell out of some, raise your stop at $4.58, then look for the next move to the downside at $3.50, where you probably want to own them for the next 10 years. It's in food, retail food group, it's called. certainly when it pans out on the in the formula that I just showed, it's absolutely exciting at $3.50. Dorado Resources. Okay, well, it's lived its life down in the toilet for quite some time. It's now trading around about whatever it is, 1.1 cents. It's actually, it used to be at $1.30 or $1.50, it looks like. So, should you be buying this? The answer is, I can't see a lot of reason that is getting clear and free of anything. So let's look at this one. It's just been flatlining for quite some time. It looks like it might have had a name change, but I don't know the full history of that particular stock. So I cannot, on the data, give you any firm guidance on this at all, other than to say you probably want to see if it starts to break up. Have a look at has anybody read the chapter in the Whiling Trading Guide where I show the diamonds? Diamonds in the Rough, it's called. Has anyone here had a read of that one? And you want to look for those you want to have a look out for that. This is Kwan, we can answer that question later, but at the moment we can only go down to the daily chart to get some clarity, and you can see that it is really best described as a bag of shit that's got some sponsorship and a bad pattern. You don't want to own it below 1 cent. You do want to start accumulating on a break above 1.3 cents, 1.4 cents. It doesn't, somebody's manipulated it. 22 cents is the best target you can get on a break above 1.3 cents. Above 2.1 cent, a close above there, and you start to think that it's got some proper legs up to, I wouldn't say $1.76, but probably around about 50 cents if it really rocked. Yeah, and Andy's saying probably backdoor listing. Okay, sorry about that. That's not if you don't have to, Simeon, but if it broke through 1.3 cents, go for it. Happy to stop below 1 cent. $22.68 was the close today. At the moment, we have to have two different thoughts, and what I mean by that is a couple of thoughts, and that is, what's the value of South 32, right? Now, I'm targeting, as you saw earlier, I'm targeting South 32 to go down to $1.22. That is a PHG trade. I shouldn't have told you about it, but you got something a little extra for the webinar for the price of spending some time with us. Now, South 32, I think it listed around about $2.30, something like that, was it? Or $2.20? Where did it? Okay, so where was it? Where did it list? You're right. Anyway, so is the value of South 32? I calculated the target on BHP. Alan said it's $2. Thanks, Alan. And Alan in Perth, g'day. $19.81 is the best target, but it's also lost the value of South 32 out of it. So I'm scratching my head a little bit, and I did say to investors who had got out of BHP in the below $50, because it never traded above $50, but in the $40, $30 area, to get back in, because BHP had completed, has basically given them a huge free kick, in that if you've gotten out, you can get back in, and instead of, you might have sold it for $40, fantastic, or $39, it's now basically cut in half. Why not get back in and improve your position? But you do need a stop loss below $16 if you're doing that. So talking about that, I think it'll probably get to $21 or $19.81. We need to see a few executives losing their heads. Anything really below $18, but I'm giving a big stop loss at $16 for investors. Anything below $18 puts into question this, and it may return back down to the $9.80 area where I bought it in 2003, and sat on it for quite how long was it? 7 years I sat on it. So that's the best thing I can tell you with BHP. The value of South 32 has thrown a little bit of a spanner in the works there, unfortunately. So, okay, let's move on. Okay, now RHC, part of the healthcare index, has been a beautiful churning stock. It is being unhealthy because it is a healthcare stock lately, full stop, new line. And it's actually been classic trading opportunity, because it came up to the right point in the points in this particular, what I call, corrective pattern. The pattern is currently corrective, but it can take it all the way down to $43.07. If it gets through about $68, I'd say that chance is out the door of $43. And it's really been churning itself around. So how you play this is, you want to be cautious about it. If you're buying it, really we want to buy it for bargain levels. And pull back up to $60 is probably a get out of jail card, or even $59.12. It's not so fantastic. Eventually, this will be a good stock to buy, but the question is, from where? Is it from $55? Is it from $53.56, or is it from $46.98? And the answer to that is, probably you've got to sit on your hands and wait, because it's developing a downtrend. And therefore, what we'd be looking for is, when it hits $55, what I do is then I put it through my filters and say whether it's a buy, or whether, a nibble buy, a buy, or a stay away. And that's what you can only do that at the price when it hits those particular prices. Can you repeat that question, please? Because you gave me a couple more. Yep. Yes, you should sell half. Yep. And raise your stop to 90 cents. The rationale for that is as follows. You've made a shitload of money, and it's good to make sure that you don't give it all back. If you sell half after you've basically made a 400% return, you could do worse. Bank half, let the other ones ride, have a decent stop. If you really don't want to give up too much up, you might have a stop at 70 cents. Or if you want to be a hero, you could have and then you don't care where it goes. Yeah, it's a good trade. May I do it? May I do a story about that? In the internet boom, I spoke at the ATAA meeting in Melbourne on April, I think it was April 2000, and I'm not sure the exact date. It might have been about on the 18th, and I said the stock market was extremely risky at this point in time, and it might have been the 18th, it might have been earlier, but I don't have the exact date in my head. And this is what the internet, this is the best representation of that stock market, and I want to do this for a reason. So this is I don't know why it keeps on coming back to AGL, but oh, I think I know why. NASDAQ. Okay, this is the NASDAQ, which is the ultimate representation of the tech boom. The high was in March 2000. A gentleman had been he came up to me afterwards and he says, "You're a bloody idiot, mate. Piss off." And I went, "That's very aggressive, right?" He said, "You're a bloody idiot. I've bought DAVnet at 30 cents and it's now $6. And I'm now richer than you are and by a country mile because blah, blah, blah." And I said, "That may well be, but just have a stop loss on or sell half." The gentleman didn't sell half. He rang me about 5 years later, which was, and I said, "How did DAVnet go?" He said, "I still got them, or they disappeared on me, and they're worth nothing now. And I borrowed against a lot of houses, borrowed on a lot of houses and things against these shares, and then I couldn't fund them, and I lost everything." So if you have made an extraordinary gain, just sell half. Now, most people in that position, their heads won't fit through the door. And I hope that's not true for you, Yuri. But what I would like you to do is to manage it properly. And also, after our best investment and our best trade, often comes our worst disaster. And so if you have had an exceptional profit, bank some, get used to the fact that you own that money and that it's yours and that you deserve it. Don't get overly arrogant about the trade that you took, because some trades you might still have in the bottom drawer that you bought from ages ago. And so it may go up, Yuri, but at least you know that you've got the money in the bank, and if it collapses, you've banked some and you're riding on the other half. Okay. Yeah, I thought I was being helpful at that time. Yeah. CAJ has got some problems. This is something I highlighted, I think, at Your Money, Your Call a while back. The volume, it's coming now into the end game, and that should be somewhere between, say, 38 cents and 44 cents. It's had the proverbial kicked out of it, and it's starting to become worthwhile buying. Hopefully, if you are in it, you've been out of it for a while, you might start to look to rebuy in there with a stop loss below 35 cents, depending on how it dances around at that time. Let's do ECX, because I don't think I've ever looked at that one. No one's ever asked me, is that just been floated? Yeah, just been floated. Okay. Eclipse, what a classic name. Okay, now it's not just been floated, I guess in the last 6 months or something like that, but nobody's ever asked me about that, so I like to do something different. So Eclipse here, it's obviously in churn and burn time. So what I've been thinking about is this probably, it's probably got about, what is it, about potential for $4 on it at this point in time on a couple of different ways of looking at things. Maybe $3.50 also. So it's been in a confused pattern. It probably will go higher after it digests all that it's done with itself. So how do we know it's fully digested its information? It's probably on a break through $3.10, a close above there. Stop would be at $2.85, and we'd be looking for 340 on the top side, 350 on the top side. Then you'd buy more on a break above 320 and raise your stop to about that $3 area if you're buying there. Okay, now with WPL, and I'm just doing a bit of housekeeping here that makes my life a bit easier, and might give us some, here we go, yeah, happy with all of those numbers. Okay, WPL, the past numbers I'm happy on. Eclipse. Woodside Petroleum. Again, it's doing one of those leaping gazelle patterns, which is not always the best pattern that you want to see, because quite often they fall over. We can see that it is rallying, but the volume that we're seeing is less than enthralling. So WPL, I think that's going to have trouble at $30 and definitely have trouble at $31. So it's a short-term trade at best with a stop at $29. Clearing through 30. Go ahead. No, I want to see a washout in crude oil a bit more. That would be awesome. And so I'm not a. I think I'd like to see the energy prices higher. Things will start to get better at the end of this year, in a couple of months' time. So things are not as bad as everybody thinks. We do have a bit of a bottom here. I'd like to see a visit at $24 or $20 or something like that. As you can see from the monthly charts, it's got some problems on the monthly charts. It needs a real definite turnaround before it'd be any good. Okay. Buy it and put it in the bottom drawer. Yeah. From there, if it's bottoming there, $20, at $50 and $60. Not at all. Once they get washed out really badly, then they have the potential to go a lot higher, particularly if they're big seminars. Particularly if they're big stocks with lots of assets that have been really drilled down. I've been mentioning that the resources are the better areas to look for bargains at the moment. The banks are still a little bit on the nose. Thanks, Chris. Thanks, Simeon. NCM. I know there's a couple of questions about gold membership or platinum membership. Probably best to call on Friday afternoon if you've got questions like that. Call the office number 1300 552 182 and we can talk about that. It depends on what suits you. Now, NCM, I haven't 1300 double 52 182. Hello world, this is John Laws. Newcrest. That's good. That's good. Okay, Terry. Terry, our target's been around the $15.75 area for NCM. It's tickled there a few times. There is a lot of overlap going on in this stock. The current rally is somewhat bemused, if you like. Gold, we did go long gold, and so NCM, I don't give it a lot of credit. I think it's still got one more push to the downside. The current rally on the monthly charts just doesn't cut the mustard, and at best $15.75 for it. The problem with NCM is that it's related to gold. Now, we've had some Profit Hunter Group trades long gold, and we bought some around here and we sold out, and then we got another PHG trade on around here. We also bought the low over here, which was, yeah, that was 1082, I think we got on a dip, and we got a good run out of it. So I'm not indisposed to trading gold from the long side. It's just that gold continuously proves that it's not right, and you've been getting knocked down again. So gold itself is doing what I call 3 sets, and those 3 sets don't prove anything too well. At the moment, if it broke down below here, there's a bit of a trend line there. Gold I've still got down to 1084, possibly a bit further, and it's sitting right on just right above the trend line now. So anything really below 1100 confirms that gold's, Jeff's saying Robo's meets in Glenorchy. Robo's meets. Okay. Okay. I like that. Okay, so really eventually. Okay, that's good hearing. Okay, so it's not good on a break below 1080, this gold, and it's probably looking for 954 in the long run. What I have seen is that a lot of the pop commentators have been promoting Aussie gold stocks. Some of them have done well, some of them haven't. I'd be cautious about gold itself, and people are saying, well, you've got to, because gold went up, you should be buying Aussie gold stocks. I don't think, I'd rather you'd be buying the US dollar against the Aussie than buying Aussie gold stocks. For some reason, I just think that it's false economy, because your commodity has been going sideways or down for quite some years, and probably needs one more guts to the downside before it would be good value buying. So take it for what it is. Some of them have been doing well, like NST. Others have been doing not so well, and Newcrest itself has been really boring as batshit. Okay, thanks everybody. Thanks, Terry. Yeah, and thanks John Robertson for being basically the reason why I can actually do this work. He gives the licenses for speaking. In Australia, we don't have freedom of speech in the financial markets. You can't just go out and talk about the stock market, unfortunately, without ASIC being upset with you. with not having a license. So licensing is very important, and those of you in Western Australia should meet Claudio Fideli, who's very, very skilled broker and very useful in some US stock areas if you're trading those ones. Good night. Thanks, Terry.